Yeah, interesting. All right, so now at this moment, what is happening? We have the structure. What is happening here? Market is testing the structure right now. As we speak, it's testing the structure and trying to bounce off it. This was the possible entry that I said, but I will not enter the market here because it's a high probability that it breaks the structure. It's testing it now, breaks it, comes down here, tests this structure as well, maybe does something like this, and then boom, catapults up. So we wait to see. I think this structure is gonna break because you see, like, already it was trying to push up. No, like it's already moving downwards. So it didn't even give it a proper try. So I think this market is coming down to, yeah, these levels. So we just wait and see how this plays out. Right now, no entry, no buy for me at least. Let's go to EURUSD while we're waiting to see how that plays out. Because I saw something, yeah, exactly. I saw something interesting here. Look, this is beautiful. So we have this strong support and resistance here. This here. And as you guys see, it has been tested and respected multiple times. Even when it broke through a couple of times, call it stop hunt, wherever, it didn't go far before it came back through it. Now here it broke through, came back down, and it retested it perfectly. I mean, like perfectly, spot on. What does that say to us? So we have fundamentals showing that dollar is going down according to the fundamentals. Dollar should be dropping even more if these bank collapses continue. We will see the news today, 1:30. We got the CPI readings. If that pushes the dollar even further down, all this what you see here is a perfect setup for a buy, and not only for a buy, for a very strong buy, for a very strong push upwards up until these levels, so until the supply zone here, and I would argue that this is the roof at 1.27, 1.127 is the price where I see the target, the roof. So this is a very good buy. The only question is, where is the entry for this buy? And this is what we're looking for now. So we have maybe a very good possible entry right now, and that is this retest. But I won't touch dollar, the US dollar. I won't touch it until the news. I don't think so, at least. Now, if it's a very clear setup. So I want to see the news pop first, and let's go into that. Let's talk about the news because this is important, guys. We got red folders today for the U.S. markets and for GBP. We're focusing on the U.S. market because we're looking at Bitcoin, we're looking at gold, we're looking at EURUSD, and they are mostly affected by the U.S. dollar. So today we got the CPI readings, and the important thing for you to remember and understand is, in the CPI readings, the forecast is 0.4%. What is the CPI readings? It's the consumer price index. Consumer price index, and it basically shows if inflation has gone up or down, if how inflation is doing. So the forecast is 0.4%. If news comes out and is 0.5% or more, that is actually good for the currency. That is good for US dollars. So let's see, actually greater than forecast is good for currency. Yeah, exactly. So I just want to make sure that I'm not saying the wrong thing here. Yeah, so if it comes out better than forecast, it's good for the currency. And what does that mean? If it's good for the US dollar, gold goes down, Bitcoin might go down, should normally go down, but it has kind of deep peg now, and you will see like Dow Jones and a lot of other commodities go down as well. If it comes out lower than forecast. So let's say it comes down out 0.3%. Opposite. We will see gold pump. We will see Bitcoin pump. We will see Dow Jones and a lot of currency pairs and commodities, equities pump. So very important. 1:30 today, and 1:30 I'm saying that's European time. That's Swedish time. So or Spanish time. So you have to recalculate that, and we got 9:40 right now for people that are overseas, so you guys know what time we're talking about. So keep an eye on this, and I would recommend not to be in the market while the news drops. You can enter the market after the news drops and you see the pump, you see the volume in a certain direction, but you don't want to be in the market while the news pumps. Let's talk about that. Let's do a little training on that. What happens? Look, so news breaks. This is a typical scenario when news breaks. Let's go on an hourly time frame. Oh. News breaks, and you will see. Let's say the news breaks here. You are inside the market, and forecast comes better than expected. So the US dollar starts to pump. Gold is supposed to push down. Before that happens, just before the news comes, people are starting to speculate wildly because people are basically gambling now in the market. And you'll see the market do this. Put up, down, and finally get its direction. What does this mean? You are inside the market, you have your stop loss. Your stop loss will be, boom, smashed. You're entering again, smashed. Trust me, I've done this several times. I've seen other people do this several times. It's the same thing every time. If you're not heavy in profit already and got your stop loss like up here somewhere, then you don't want to be in the market when the news pops. So let's say we want to enter the market here, and we know the news are here. We're not going to enter the market. We're going to wait until the news pop, until we see this high volatility, and then we see the news printed. Yeah, of course, buy the rumors, sell the news. But if you want to do that, you gotta know exactly what you're doing. So we want to see this high volatility go first, and market find its direction and start pumping in that direction. Like here, for example, that's when we're hopping in. And you either scalp, you pick up small profits along the way, because you don't know how much it's gonna pump. Like it can come down here and then reverse. You don't know if it's gonna come down here or if it's gonna even continue even further. So you want to pick up small profits all the time along the way, as long as you see volume in the market. As long as you see volume in the market, you see the market is pushing in that direction that you want to, you keep doing those small scalps, or you're entering bigger trades, but you just take profit along the way, and don't be greedy. Don't be thinking like, yeah, but what if if I wouldn't have done that, I could have caught like this whole move. I could have caught everything here. That's greediness talking. And if you're greedy in the markets, you will lose. I guarantee that. I can bet money on that. So you don't want to be greedy. You want to accumulate those small profits. You want to build up. You want to stack up like that. And sometimes you're lucky. You catch those big moves, but a lot of times you won't be lucky, and you will be stopped out, and you will regret it, and you will think about, oh shit, if I just would have sold here before the market turned around, then I would have caught that whole if you know what I mean. If you've been trading for a while, you know exactly what I mean. So let the news hit, and then you hit the market. And if I'm calling out a trade, that will also be after the news. I can call setups before the news, like this is what I'm looking for to happen. This is what I do before the news. I make setups like the ones that I posted now in the Telegram channel. We look at them, we see, okay, these are the levels we're looking for. These are the possible scenarios that we're looking for. Now let's see what actually happens. And news hits, market starts to move. We see the direction clearly. Boom, we get in. Let's get back to, I'll take that bet. Yeah, all right, bro. Yeah, so gold is pushing down. Let's look at this. Yeah, you see? So it broke the structure. Sure. Now is a very nice entry point. Why is that? Because this whole region is a very nice entry point. Why is that a very nice entry point? We got the 61 point Fibonacci retracement of the smaller swing. We got the 61 point Fibonacci retracement from the bigger swing, almost perfectly aligning. In the same time, what do we got? Look at the number here. What does the number say? 1,900. It's a whole number. It's a whole and round number, and markets love whole numbers, so it's also very strong support at in the same time. So this is a very good entry zone for a buy. Why am I hesitant? Guys, look. This buy is good from here until here. But not further, because here is so much resistance, it can turn around and come back down again and test this again. So we only have a good buy from here to up to here. Then this is a no man's, like no trade zone, and then we got another good buy from here to here. All right. Hope you understand my beautiful Picasso drawings. But yeah, you see, so basically tested it, came back up. No buy yet. We don't need to rush into the markets. Let's just watch if we see something nicer. But the thing is like this. From here to here, we got, oh damn, we got 100 pips. That's a good trade actually. I'm gonna be honest, I thought it was less than that. I thought it was like 50 pips or something. I wasn't looking at the price, but we got about 100 pips there. That's a good trade. Yeah, we got another confluence. On the hourly time frame, we got the 20-day EMA also giving support there. Doesn't mean very much, but it means something. It reinforces the support at this area. I'm gonna be honest, I think we might have missed a very good buy opportunity here, down here, but the market might come down and test it again. If the market comes down and tries this area again, this is the buy opportunity I'm looking at. Like this. But, and I would enter at around 1900.70. Why is that? Because I want to see that market bounce off nicely. The only thing is the take profits. So in this case, the first take profit, yeah, 1903 is perfect. That's 30 pips in profit. But I would put it even earlier. I would put it here, just to take some risk off the table. Damn. If market comes back down, this is the entry for our trade. But if it doesn't come down, guys, no worries. There's more trades. Let's not be greedy and hunt those trades. What I don't like with this is that the stop loss, like I would want to have the stop loss down here, but that's like a 50 pip stop loss. Not very nice. Nice, but not very nice. Yeah. I would put it at 1897.7. That's a 30 pip stop loss. We're sticking to our rules. Yeah. I'm typing out these numbers, but we might already have missed this trade actually because it's starting to move in another direction. We'll see. $19.05. We always want to have a take profit at the 38.2 Fibonacci retracement. Why is that? Because 38.2 Fibonacci retracement is a very strong reversal zone on the retrace. You don't want to have it exactly on the 38.2 Fibonacci retracement. You want to have it on like just before, because sometimes market turns just before the level. So, and that level would be in this case 5 and just underneath. So 19.0. I would just do like this. That's good. And then it's getting more interesting. $19.08. And the next one, I will just leave it open. This is the area, of course, a target area. The supply zone here would be the area, but it doesn't have to be. Now the thing is like this, we have to see what happens because we got, this was the entry and you see the market is going back up. So it's testing the 23.6 Fibonacci retracement on the small swing now. So hopefully it comes back down, hits our entry, and then we can go for this buy. If it doesn't, let's say it runs from here, guys, it's a no trade. We'll find more trades. Like never hunt. Like I know, especially in the beginning when you start to trade, trading is like, it's exciting. So you just want to find trades after trades. When you finish one trade, you want to get into the next one. And this is a recipe for a disaster. Like you will blow your account as long as you're in that emotional status. All right. So you gotta be very emotionless. You gotta be very cold entering the markets, and you gotta be I say very selective with the trades and just let the trades come to you. If you miss one trade, no problems. Let's look for the next one. There's always trades, and if you didn't catch a whole trade on the whole day, no worries. Tomorrow is another day. All right. So, like I always say, we rather don't trade than trade and lose money. All right. Now, this is the setup. I will send it out in the Telegram channel as well. Oh shit. Wait, I'll do just some clear instructions here so that nobody misunderstands this and does a wrong move. Remove this error here. This is what we're doing.